Thanks everybody for joining. This is our monthly webinar that we do, try and do a little bit of a different topic each time. And today we're going to go over a case study of how somebody used a self-directed IRA to invest in real estate to grow their retirement accounts. And that's really all. Self-directed retirement accounts are just a different way to grow your retirement account and not being limited to stocks, bonds, mutual funds. You can invest in things like real estate. And we're going to give you a case study showing an example of how that actually worked. That's me. My name is Bill Neville. I'm one of the business development managers at Entrust. Excuse me. I have to read this. It's important to know that Entrust, we are not financial advisors. We don't give advice. We don't recommend or promote or endorse any particular investment. We are administrators of retirement accounts. So we do not provide advice or endorse any particular investment. All information materials are for educational purposes only. We encourage you to talk to attorneys, accountants, financial advisors, anybody in your life that would help you with that kind of thing before you make any financial decisions. Also, by the way, if you have any questions, please type them into the box, the chat box, and I will get to those questions at the end. I'll go through them all one by one. So feel free to type it in there at any time that you want, and I'll cover them all at the end. So real quickly, we're going to give an overview about Entrust. We're going to talk about the concepts of real estate IRAs. What are some of your different investment options specifically associated with real estate? We're going to do the case study, talk about partnering, go over how you handle real estate, the property expenses and income, then how do you get started, and then, like I said, we're going to have a Q&A at the end, which will be us answering questions in the chat box. About Entrust, in case you didn't know, we are administrators of self-directed retirement accounts, which means that clients open an account with us and they instruct us what they want to invest in, and we make it legal for them to hold alternative assets within the retirement account. An alternative asset is anything that's not a publicly traded stock, bond, mutual fund. So again, we don't advise or recommend, or we're not lawyers or CPAs. We administer the account that allows you to hold alternative assets. We have been in business for over 35 years at this point. Actually, we're at 36 years. We process a lot of transactions every month, and we're almost at $3 billion in total investor assets. We focus on education. So we are the only company in our space that has been certified to provide continuing education classes. We have one for realtors and another for CPAs that provide two CE credits for 2-hour classes in certain states. I do it here in California. So if you're a realtor, CPA, and you're interested in that class, you'll get my email at the end, write to me, and we can talk. We have a class called an IRA Academy. We actually do education for other companies in our space. We really are the leading educator in our industry. And we have offices throughout the United States. I'm working out of our Oakland office, Oakland, California, which is where we're headquartered. So if you hear the term real estate IRA, there is no IRA. It's not a type of IRA. It's more of a marketing term that we in the self-directed IRA industry use to essentially let people know that you can buy real estate within your retirement accounts. Not a lot of people know that, and I'm assuming that everybody here knows that. That's why you're attending, but not everybody does. So it's just an IRA that holds real estate within it. The actual types of IRAs are traditional IRA and a Roth IRA for individuals, a SEP and a simple, and then also you can have an individual 401k. We have an individual 401k. All of those can invest in real estate. They can also invest in precious metals or private equity, promissory notes, trust deeds, tax liens. We had somebody invest in a racehorse one time within their retirement account, a bowling alley, cattle. Pretty much anything that you want to do within your retirement account, you're allowed to do it, just about. There's a few things you're not allowed to do. But again, this is a real estate focused. So real estate IRA is just your retirement account, traditional IRA, Roth IRA, whatever it is, and you're investing in real estate within it. Any kind of real estate is eligible to be held within a retirement account. Single-family homes, multifamily, commercial, land, and then additional things outside of real estate like precious metals, private placements, offshore real estate. We get a lot of people who are investing in other countries, really anything. The only thing you're not allowed to invest in within your retirement account, and we don't have that as a slide on here, the only thing you're not allowed to invest in are collectibles, life insurance, and S corporations. Aside from that, your IRA you're allowed to do it within your retirement account. So here's a case study. We're going to show you an example of how somebody used it within their Entrust IRA to buy real estate and grew their retirement account. So we're using the pseudonym David Castle, who is a realtor in Roseville, which for those of you who don't know is up near Sacramento, married, and et cetera, and he wants to invest in real estate with some of his retirement funds. So he took a portion of his retirement account, some of which was held at a traditional brokerage firm where he had it in mutual funds, and decided he was going to take a portion of it and invest in real estate, and transferred over to us, opened an IRA with us, and wanted to get outside of stocks and bonds. Had some Roth IRAs with other companies, so he opened an account with Entrust and transferred over $120,000 to a Roth IRA, which is a good-sized Roth, and did a transfer. So he opened an account with us, which involved completing an account application and a fee disclosure form, sent us a transfer form along with a recent statement for the account he was transferring from, and we completed that. We signed that transfer form as the receiving trustee and sent it over to the other custodian, which is, I'm getting ahead of myself, which is all the stuff explained on here. Opened the account, filled out the transfer form, sent it to us, we signed it, we forwarded it on to the other company, and within a couple weeks, the money transferred over to his Entrust account. So now he has cash in his Entrust account that he is now free to go and find an investment that he wants to make within his retirement account. So there's a few different options on how you can use your IRA to invest in real estate or any other investment. You can buy all with cash, which is a direct purchase. So you have David has $120,000 in his retirement account, and he wants to buy a property for less than $120,000, so he pays cash. He could also have partnered his IRA with any other investor, including himself. So if he had wanted to, say, put 50% from his retirement account and 50% from his own savings, he could have done that, and that's called partnering. You just have on the purchase contract, it lists your IRA as a certain percentage owner, and it lists yourself as a certain percentage owner. He also his IRA could have borrowed money. If he needed to borrow money, there are financial institutions that will loan money to your retirement account in order to make an investment. It's called a non-recourse loan. The non-recourse means that the only recourse the lender has if his IRA were to default on the note is to take the asset or the property itself. They can't go after him personally because he individually is not the borrower. His retirement account would be the borrower, nor can they go after any other assets in the IRA. For that reason, there are a limited number of financial institutions that are willing to do non-recourse loans to IRAs. They are out there. They do exist. We have a list of some. And then the last option, an individual can set up a single-member LLC where the IRA invests in the LLC. So you set up an LLC where the single member is the retirement account. The money transfers from the IRA to the LLC account, and then the LLC buys the property. So instead of the IRA buying the property directly, the IRA invests in an LLC, and the LLC buys the property. The advantage to that is that it gives the individual account holder checkbook control. So when somebody buys a property with their retirement account, the retirement account owns the property. We are the administrator of the retirement account. So when a check needs to be written to pay any expenses, we cut the check because we are administrator of the account. Whereas if the IRA invests in an LLC and the LLC buys the property, the manager of that LLC, which can be the account holder, has checkbook control over the money. You open a bank account in the name of the LLC, and then the LLC writes the check, and the individual can be the manager of the LLC and has the ability to write the checks. So again, buying all with cash, partnering with another investor, using non-recourse loans or leveraging, and then finally setting up a single-member LLC. Those are the various ways that you could make an investment, typically property, within your retirement account. So David chose to partner his IRA because it gave him more money to work with. So he and his wife also had an IRA, so they decided to take two different IRAs, take his IRA and his wife's IRA, split the investment equally 50-50, which means that each account receives 50% of the revenue, and each account is responsible for 50% of the expenses. So if it's rented out, the rent checks have to go equally 50-50 to each IRA, and any bills like property taxes, insurance, utilities, anything like that, have to be paid equally 50-50 from each account. Now 50-50 only because that's how they structured this investment. It could have been 80-20, 70-30, 90-10, whatever they wanted to be, but in this example it was a 50-50 split. So it's up to the client to find the property, do their due diligence, do their research, talk with realtors, make sure that they're getting a good investment. In this particular instance, they found a property near Austin, Texas. It needed some work, so the IRAs were going to have to pay for some work that needed to be done, get all the inspections and do all their due diligence. And in this particular instance, he found a property that, although it needed a little work, he didn't have any major red flags, so decided to move forward with the investment. So when purchasing a property with an IRA, with Entrust, we have a form. For audit trail purposes, everything we do requires forms because we are a financial institution that is subject to regulatory audits, and they come in and they want to see audit trails for everything that we do. So we have forms, and one of the forms whenever somebody wants to purchase an investment is called a bidirection letter. So they each completed a bidirection letter showing the address of the property, how much the property is worth, how much they were investing. And so on the purchase contract, when it lists who the buyers are, it's going to be each account. And the name of the account is the Entrust Group for the benefit of, or FBO, client's name and account number. And so the Entrust Group FBO, David Castle, account number 12345, not really the account number, with a 50% undivided interest because, remember, they are partnering their IRAs. And then it also lists the second buyer, which is the Entrust Group FBO, the wife, Emily Castle, account number, her account number, also 50% undivided interest. So a good faith deposit of $1,000 was requested, so we processed $500 from each of the retirement accounts that was requested by our clients through the bidirection letter. So title company prepared the documents. Everything was reviewed by David and Emily. Then they send it to us so that we can review and sign on behalf of the IRAs. So again, the IRAs are the ones that are buying. We are administrators of the account, so we sign off on the documents. But the clients need to review, and part of our process, our business policy, is that we have our clients sign read and approved on any document that requires the signature of the IRA. So the clients themselves aren't signing on behalf of the buyer. The account is the buyer. We sign on behalf of the buyer. But as an internal business policy, we ask our clients to give us what we call our read and approved signature. So the documents came through. We reviewed everything, reviewed all the documents. We have a real estate group that goes through this process, and everything was wired from their IRAs to the buyer, to the seller. Purchase was completed, and now their IRAs own the investment property. So title is held in the name of the retirement account, so the deed was recorded in the name of the IRA, and since this was partnered, it was titled specifically the Entrust Group Inc., FBO, David Castle, account number, and then 50% undivided interest, and the Entrust Group Inc., FBO, Emily Castle, account number, 50% undivided interest. Now their IRAs, their two retirement accounts, own this property, so on a going forward basis, all the rent goes directly into their retirement account. So the tenant either makes out two checks, 50% to each of the retirement accounts, or they make out one check to a property manager or some other non-disqualified third party who receives the money and then forwards it to the retirement accounts. The clients themselves don't receive the rent because the clients don't own the property. It's the retirement accounts themselves that receive the rent and own the property. Same with expenses. So we mentioned earlier that it needed a little bit of work, the kitchen and some other things. The clients can hire the contractors to do the work. The clients themselves are not allowed to physically do the work. right? The account holder is not allowed to do any actual labor on the property, nor is the account holder allowed to stay in the property, right? Those are prohibited transactions. There are certain people that are disqualified persons from living in, staying in, or working on the property. It's the account holder's spouse, the account holder's ancestors, so parents, grandparents, great-grandparents, etc., and account holder's lineal descendants, so children, great-grandchildren, grandchildren, etc. They are disqualified persons. They can't stay in or work on the property. But they can oversee the property. The account holder can still determine what contractor they want to have to do the work. The account holder is allowed to pick their tenant that they want to have stay at the property and pay the rent, as long as it's not a disqualified person, the people that I mentioned. And the account holders themselves are not allowed to receive the rent. The rent has to either go directly to the retirement account or to a non-disqualified third party like a property manager. So as it says on there, any revenue from the investment property will go back into the IRA. And when considering buying real estate within your retirement account, it's good to plan to keep some cash in the account in case you run into any expenses. And in this case, they transferred $120,000. The property was only, $40,000, under $40,000. So when it needed some work, they had some cash in the retirement account, because the account has to pay those bills, not the individuals themselves. If they don't have the cash in the retirement account to pay any expenses that come due, like if it need to put a new roof on, they have to get money into the retirement account to pay those expenses, either through making an annual contribution, maybe transferring more money from another account that they have somewhere else, or, like I mentioned earlier, the retirement account can borrow money. If there is an expense that comes up and the retirement account doesn't have the cash, the account can borrow money. There are, first of all, financial institutions that will loan. Also, an IRA can borrow from any non-disqualified third party. If you have a friend or a sibling who's willing to loan money to your IRA, draw up a promissory note, that will cover the expense. But the money has to go into the account first, and the account pays the bills. David and Emily decided to rent the newly remodeled property. They hired a property manager, which, although it's not required, we do highly encourage anybody who has a property within the retirement account to hire a property manager. It reduces the likelihood of a prohibited transaction ever occurring within your account. So as it says on there, the last below point, is advisable to have someone other than the IRA owners handling the day-to-day operations for the property. It's advisable. We highly encourage that. So every month, a rent payment for the tenants was deposited into their Entrust account, $495. So almost $1,000 was rented out for. So $495 went into each IRA each month. After just a couple of years, they had already, just in rental income, had recovered the cost of the renovations. And again, the rent is being paid directly to the IRA, so this is not a taxable event. This isn't something that an individual has to report on their income tax. They're just simply growing their retirement account. It's like a dividend. It's like a stock dividend. It goes directly into your retirement account. It grows the retirement account. So there's no filing it on the taxes. It's just if you make $9,000 in rental income, your retirement account grew by $9,000. No taxable. And in particular, in this instance, they used a Roth IRA. Not only is it not taxable then, but it's never taxable because a Roth IRA grows tax-free. So eventually, they bought the property in 2006. They sold it about 9 years later. They took the $35,000 initial investment, did some renovations on it, and eventually, almost 10 years later, sold it for about $153,000. So they made an investment of roughly $118,000. That's solely on appreciation. We actually didn't incorporate in the rental income in that in how much they grew the retirement account. If for over that course of the 9 years, they had it rented out a decent amount of time, and so the account actually grew even greater because of the rental income that was generated. So they each account received $59,000 from the sale of the property, which translates to a 14% return. Again, that's appreciation only. That doesn't take into account the rental income. So investing in a single-family property offered two valuable things: a revenue stream that came from the rental income, and it built up equity. So it's, again, I come back to the self-directed IRA just provides an alternative way to grow your retirement account instead of being limited to stocks, bonds, mutual funds. If you're not crazy about the stock market, or if you just want to diversify out of the stock market, a self-directed IRA offers the opportunity to do things like real estate or private equity or precious metals or anything else. And this is one example of someone who had pretty good success in doing it within their retirement account. So the process is pretty straightforward. You open an Entrust account, which you can either do by filling out our forms, or we have a portal that you can open the account online. And if anybody who is thinking about doing this or has been thinking about it, and you're ready to get off the couch and do it, we do have a promotion going on right now that if you open the account online and you use the promotion code of PROMOTAX17, with promo tax being all capitals, you can open. Well, we typically have a $50 new account establishment fee. We are waiving that fee, but that expires April 18th. It's a tax promotion. Then you fund your account, which typically is either from a transfer from an IRA or rollover from a 401k or making an annual contribution. And then you purchase your asset. You instruct us what asset you want to purchase using our buy direction letter, and then the supporting documents for the investment you're making. For real estate, it would be a purchase contract. For something like a private placement, it would be a subscription agreement. For a bowling alley, I'm not sure what it would be. Or a horse, it would be the purchase contract for the horse. It's pretty easy. Again, we have a link to do it yourself online, and there's the promo code to get the $50 account fee waived, but that is only good through April 18th, and also get your taxes done by April 18th. You can do them both at the same time. So to summarize, we had a client who made a good bit of money using real estate within a retirement account, but real estate's not the only option you can do in a retirement account. There's a lot of different things you can do. Pretty much if you can imagine it, you can do it within a self-directed IRA. The only things you're not allowed to do, again, are collectibles, life insurance, and S corporations. So collectibles would be things like art, alcoholic beverages, coin collections, those types of things. You have different funding options, such as all cash, using non-recourse loans, leveraging with loans, partnering your IRA, or setting up a single-member LLC, which gives you checkbook control. It is incumbent upon you as the account holder to do any due diligence on whatever investment you choose to make. We don't help with that process. If you buy a property and there is any maintenance or renovation or any expenses whatsoever, that the account is responsible for those fees, because the account is who owns the property. And if you have partners, then each partner is responsible for its percentage share of the expenses. Any revenue goes back into the retirement accounts directly. And again, same thing, the partners, if you are partnering, each partner receives its percentage share of the revenue. And in this particular instance, they got a pretty good return on a cash basis from the rental income, but they also happened to buy at a nice area at a time that appreciated well, and so they got a lot of equity in the property before they ended up selling. So that's our story of a case study of using real estate to invest in your retirement account. I'm going to get you to my information. There's my phone. Extension 237 would be the last part of that. Oh, no, wait, that's my cell number. We gave you my cell number. And then there's my email address if you want to email. So now I will get to the questions. Feel free to type those in and work through these as I go. First question, did he have to cash out his investments and then transfer to Entrust? Yes. So people will liquidate their investments and transfer cash, right? Because they're going to use cash to buy the retirement account. So typically what people do is, if they're holding mutual funds, is they're going to take, choose whatever stocks, whatever mutual funds they want to sell, cash that out, and then transfer cash over to us, and then we use the cash in the account to buy whatever investment the client instructs us to make. Do banks or credit unions offer non-recourse loans? Could you please provide me a list of the non-recourse lenders? So yes, the list that we have of non-recourse lenders, a few of them are banks, and a few of them are private money lenders. Rick, if you want to email me on that, my email address there, and just ask me to forward you the non-recourse lenders list, I'll fire that off to you. When you form an LLC, a limited liability corporation for the IRA, does it have to be a single member LLC, or can spouses be equal members? Good question. So we call it a single member LLC, but it doesn't have to be single members. You can bring in partners. But whoever partners on that LLC, so if you want to bring in, your IRA and your spouse's IRA, or your IRA and your own self and, maybe a friend or parent or whatever, you're allowed to do that. It has to be done at initial setup, and the contribution that's made, so the amount of money that's brought in by each of the partners determines the percentage ownership in the LLC. So if you want to bring it the same way that we showed you an example where a husband and a wife partnered their IRAs 50-50 to buy the property, you can partner the IRAs 50-50 to invest in the LLC, and then the LLC would own the property. It's again, the advantage of the LLC is it gives you checkbook control. But I mean, to answer your question, yes, you can partner. You can bring in multiple partners on an LLC. Let's see. How long is the process from submission to Entrust to a check being cut? To a check being cut for the investment, I presume you mean. And well, so typically it takes to open an account takes 10 minutes, right? If you send us the forms, we usually have it open by the end of the day, or at the longest the next day. Then the money gets transferred over. That's the longest part of the process from a standpoint of opening and funding your account. We don't have any control over how long the other custodian is going to take to transfer the money over to you, but that's typically about a week. Some custodians take a little bit longer, but it typically takes about a week. So now you're talking about opening and funding your account in roughly 5 to 7 business days, maybe 2 weeks at the longest. To process your investment, we turn those documents around in 1 to 2 days. So if you send us the purchase contract, if you send us and everything's completed correctly and everything's in the name of the IRA, then we will send out that check in 1 to 2 days from the date that we get the documents. But when you're talking about real estate, there are various documents that need to be put together. And so it doesn't really add any time to a typical close. And like I said, we turn the check around from the time we receive the documents in usually 1 to 2 days. Can you move funds from active 401k account from current employer to Entrust self-directed IRA? That is also a good question. Usually not. So in order to roll over money from a 401k for a company that you're currently working for, you typically need to have a triggering event. And that triggering event is typically you leave the company. Some plans, some 401k plans, some companies allow for what's called an in-service withdrawal or an in-service distribution that allows you to take your plan that you're currently under and covered by and roll over some of that money to a self-directed IRA. So if you are working for a company and you're part of the 401k plan and you want to roll some of that over into a self-directed IRA, you simply need to either talk to your HR or call your plan provider, whoever it is, or review your plan documents and look for in-service withdrawal or in-service distribution, see if it allows it, or call your plan provider and just ask them, can I roll over money to another account while I'm still working for the company? Don't expect the answer to be yes, but you might be surprised. I might be surprised. What does Entrust Group charge fee for managing the account? So for administering the account, we typically, again, have a $50 new account establishment fee, but we're waiving that right now until April 18th. We have an annual fee in which we give you the option of either having that fee, the annual fee, based on the number of assets you have in the account or based on the value of the account. The per asset fee is $299 a year. So in the example we used earlier, they each had one property. Each account is subject to $299 per year for that one asset. So you could have an asset worth $50,000, you could have an asset worth $1 million. it's going to be a fixed $299 a year. We bill that quarterly, so it's $74.75 every 3 months. If you have a multiple assets, or if you have a lower dollar amount, we do have a fee option, annual fee option, instead of a per asset fee, of a fee based on the value of the account, and that starts at 0.95%, 0.0095 times the first 25,000, and then it starts to tier downward from there. So depending upon the assets you have, you're not going to pay any more than $299 per asset. Potentially, you could pay less. We also charge a fee to process transactions for real estate transactions. It's a one-time fee of $175. That's to review all the documents and sign off and process the real estate transaction. For non-real estate, such as private placements, LLCs, things like that, it's a $95 fee. Can a spouse of the IRA holder do design work for the property, i.e. determine kitchen layout, select fixtures, etc.? Can they receive separate compensation for their work? The answer to the first is yes. The answer to the second is no. They can be involved in, picking out fixtures and doing those kinds of things, but they cannot get paid for it. They cannot. So if they have a business that's doing that, they can't do it. Their business can't, or they can't be reimbursed, and the business can't be reimbursed for it. What are the costs for Entrust account opening and maintaining? I already answered that question. What about UBIT tax? Unrelated business income tax. So what that is, I'm going to throw out a quick message to my marketing team. Can you delete some of these older questions that are on here and get down to the one that says, because I'm having trouble following this. You left some of the questions on here. So UBIT. So that stands for Unrelated Business Income Tax. And what that means is that there's two things: unrelated business income tax or unrelated debt financed income tax. If you use leveraging in your account, so if you use borrowed money, your account uses borrowed money, it's going to be subject to unrelated debt financed income tax. And what that means is that the portion of revenue that's gained that is associated with borrowed money is subject to tax. So your IRA could end up paying tax. So let's say your IRA puts 50% down and borrows 50%, and then in a year earns $10,000. 50% of that $10,000 is subject to unrelated debt financed income tax. So $5,000. Actually, you get a free $1,000. So $4,000 of that would be subject to unrelated business income tax, which is a different tax rate than general income tax. Similar to that, unrelated business income tax occurs when you are considered to be running a business within your retirement account. So for example, I met someone once whose IRA owned a franchise. I think it was like a Mary Maid's franchise or something like that. So the retirement account owned it, and then the retirement account received all the revenue. The retirement account paid paid the employees. The retirement account was subject to unrelated business income tax because it was running a business. A good example in real estate where you might be subject to UBIT is if you're doing fix and flips, and if you're doing multiple fix and flips. So if you're buying a property, fixing it up, flipping it, buying another one, fixing it up, flipping it, and you're doing multiple fix and flips in a year, you could be subject to unrelated business income tax. It could be determined that you are running a fix and flip business within your retirement account, and it's subject to unrelated business income tax. If you're simply making an investment, like a buy and hold property would not be subject to unrelated business income tax. It would be subject to UDFI if you do use leveraging, though. So do you have to cash this and then transfer to Entrust? Please delete that question. Banks or credit unions offer non-recourse loans. Please delete that. I answered. What does Entrust charge? Delete that. Is financing available only for single family, or is it available for commercial property as well? It's available for anything. I actually think commercial property is easier to get a non-recourse loan. Do banks or credit unions offer non-recourse loans? Please delete that. What type of rate and LTV are available? Typically you're going to be looking at a 35 or 40% down. when I get if you want, I can send you also, if you want to email me, I'll send you the non-recourse lenders list. And I don't know what rates they're offering right now. I don't have I have a couple properties in my IRA, but I bought them with cash. I don't have a loan. So I don't know what the rates they are charging. But I know that the typical down is probably more like 35 or 40%. Rates I think are comparable, but best thing is call the banks yourself and find out what the rates are right now. What about flipping real estate? Maybe 3 deals a year. Yeah, so UBIT, right? Like that's kind of what I talked about. I had heard a figure that said if you, like the magic number's 5. If you do 5 deals, 5 a year, it's considered a business. If you do less than that, it's not. So take that's what it's worth. I've heard that. I don't have anything in writing that states that. I don't think the IRS puts anything in writing that says that. 3 deals a year, I mean, you're in the gray area, I think, as far as whether you'd be subject to UBIT or not. Can partner investing entity be a non-retirement brokerage account? Well, it wouldn't be. I mean, when you're talking about non-retirement brokerage account, you're talking about your own savings, right? I mean, that's your name, right? When you have your own non-retirement account, it's basically just your own cash that's being invested. So if the partner would be you personally, you would take money out of that brokerage account, and if you're buying a property, you would sell some of those stocks you hold in the brokerage account, cash it out, and that would be your personal name. So you would be a partner, your IRA would be a partner. Are there any special rules when selling an asset? Special rules. I mean, just your IRA is selling the asset, so your IRA receives the revenue. I mean, that's really the only thing. It's whether you're holding real estate or whether you're holding stocks and bonds and mutual funds, and if an IRA holds it, the IRA sells it, the IRA receives the revenue. That's the only rule. What are the fees for having Entrust cut the checks and sign for the purchase contract? So to review and sign any real estate transaction that we process is $175 to review and sign off on all the documents, right? So it's not just the purchase contract, it's all the closing documents. It's usually like a couple-week process of some forms going back and forth, et cetera, et cetera. We review and sign off on everything. We do also charge $10 to cut a check. So the fee, the $175 for the real estate transaction, $10 to cut a check. Can this process be used if you want to flip the property, and is there any time limit before you can sell the house? Yes, it can be used if you want to flip the property. A lot of people do that. And no, there is no time limit before you can sell the house. You can do it whenever you want. Do the offer and the bidirectional letter get submitted first to Entrust before being submitted to the seller? So good question. The bidirectional letter is an Entrust form. So that's strictly internal to us. That doesn't go to anybody other than Entrust. You can do the offer. Like sometimes there's negotiation going back and forth, so the offer and acceptance. Once you have an accepted, agreed upon term amount and the contract is being put together, then that's when you need to submit it to us along with the bidirectional letter. We don't need to see the offer itself. Need to know about education. So this is a question, need to know about education or certification for real estate agents, and you asked that as a question. The CE program, is that what, I don't know, sorry, I don't know what you're asking me. We have a 2-hour CE class. Maybe you can email me, Daryl, and give me a little more clarification on what it is that you're asking me there. How does the LLC work? You create an LLC under whatever name you want to create it, ABC LLC company, with the IRA being the member, right? So you're not the member, your IRA is the member. Unless you're going to partner, then you can be a partner along with your IRA. You submit the operating agreement for the LLC to us along with our bidirection letter and the instructions on where to send the money. You've opened a bank account in the name of the LLC. You instruct us to transfer whatever money to that LLC bank account that you want, and now the LLC that is owned by your IRA is funded, and now you can use that money that's in the LLC bank account to go buy an investment in the name of the LLC. So if you're buying a rental property, if you're buying a property, the rent goes to the LLC pays the bills. Eventually, the money has to go back from the LLC back into the IRA because the IRA owns the LLC. But that's how the LLC works. You set it up, you use the LLC to buy an investment. Eventually, you dismantle the LLC and put the money back in the retirement account. What kind of fees did the case study incur? Well, we had a little bit different fee structure back in '06, but I mean, once the initial investment in the property would have been $175, and an annual fee, like at this point, it would have been $299 a year. And then when the property got sold, it would have been another $175 process of that sale. So he had it for what, 9 years? So $299 times 9 plus $350. And then, you know, we probably wrote some checks, let's say a couple of checks a year, so that'd be another $20 a year. So whatever that adds up to. Let's make it an even to 10 years. So $300 times 10, so $3,000 plus $350 plus another couple $100. So maybe $3,500 over the course of 10 years, in which they made, what did that add up to, $100 and some thousand. While the rollover money is in the account waiting to be invested, does it accrue interest? No, we don't pay any interest. We used to, but interest rates kept dropping and dropping and dropping, and we can't really afford to pay any interest now. Can a 401k from a previous employer be converted to an IRA with Entrust for real estate investments, or is it restricted to Roth IRAs only? Well, so a 401k has a lot of 401k plans allow for both a Roth option as well as the traditional pre-tax contribution. So if you have a 401k that you want to roll over to an IRA to invest in real estate, if you have Roth, if you have post-tax money in that 401k, that has to be rolled over to a Roth. If you have pre-tax money in that 401k, that has to be rolled over to a traditional IRA. Right? So either any type of retirement account that can be used to invest in real estate. If you're rolling over from a 401k, it depends upon the type of money you have. Do you have pre-tax or post-tax in that 401k, or do you have both? If you have both, then the pre-tax goes to traditional, post-tax goes to Roth. If you have one or the other, if you have all pre-tax, then that has to roll into a traditional IRA. If I'm 65 and want to pick some money from the account, what can I take out? If I'm 60 and want to pick some money from the account, what can I take? You can take it all out. So at age 59 and a half, you are no longer subject to a 10% penalty to take the money when you take a withdrawal. At 70 and a half, you are required to take money out of the account. It's called a required minimum distribution. Between 59, I mean, you can take money out of your account anytime you want. Just prior to 59 and a half, assuming it's a traditional IRA, you're going to pay a 10% penalty on top of the tax. And then at 70 and a half, you have to start taking money out. So you're age 65, you can take out any amount of money you want. Hi, I have both 401k and Roth 401k with my previous company. Can I roll over 401k to self-directed traditional and Roth 401k to self-directed Roth to avoid paying extra tax? Thank you. Yes, that was essentially the question I answered before. For your 401k would roll into a traditional IRA. Your Roth 401k would roll into a Roth IRA. Those are not taxable events, and then you can use your accounts to invest in whatever you want. Can you rent self-directed real estate property to brother or sister and then get invited to use it for a week? Is this prohibited? So good question. You can rent to your siblings. No, you're not allowed to stay in it. The rules state that you're not allowed to stay there. So yes to renting to the siblings, no to staying there. Can I buy property owned by me? Can I buy a property owned by me and two siblings to put into an IRA? Can your IRA buy, I'm assuming you're saying, can your IRA buy property owned by you and two siblings to put into an IRA? The answer to that is no. You are a disqualified person. Your IRA is not allowed to do business with you. Your IRA could buy a property from your two siblings. Your IRA cannot buy a property that you have ownership in. Any annual account maintenance fee? Yes. $299 per asset per year, or a fee based on the value of the account. industry standard in our industry to charge an annual fee. Some of our competitors only charge a fee based on the value. We give two options, either the flat per asset fee or a fee based on the value of the accounts. I did not see rehab costs. You showed entire difference as profit. Yeah, you brought up a valid point there. We probably didn't. I think what we ended up doing is we didn't show the rehab costs, and we also didn't show the rent, the rental income that was generated. So yeah, we could have probably been better about that. Sorry. Do we have a choice of bank? Do you have a choice of bank on where to put your cash that Entrust holds? The answer to that is no. Do you have a choice of bank that you can use for non-recourse lenders? Yes. But it's unlikely that you're going to get a non-recourse loan from a Wells Fargo or Chase or somebody like that. They don't tend to do that. We have a list of financial institutions that will do non-recourse loans that you can choose from and see who you can lend money from. But I'm thinking that you're asking, do you have a choice of bank and where to put your cash? And the answer to that is no. What is the cost to open an account, recurring monitoring costs, and other costs? Okay, so I already answered this question several times. Other costs, appraisal, et cetera, I mean, other cost is going to be whatever your investment incurs, right? Like if you have real estate, that's going to incur fees. It's going to incur costs that you're going to have associated with that. So it depends upon your investment what costs that you have. But I mean, the Entrust fees I've gone over a couple times. What if you take a loss, rental with negative cash flow? Can you take the loss on your current year taxes? No. You didn't lose the money. Your retirement account did. You don't get to write off losses within your retirement account. You just simply lost money in your retirement account. If you buy stock in your retirement account and that stock goes down, you don't get to write that off. Your account just lost money. That's all that happens. Do all assets, if leveraged in LLC, have to be non-recourse loans? Do all assets, if leveraged in LLC, have to be non-recourse loans? All assets. And so if your IRA if your IRA owns the LLC and the LLC is borrowing money, it has to be non-recourse. You're not allowed to use, like if it's essentially your IRA. Although you're using an LLC, the LLC is owned by your IRA, so therefore any investments that LLC makes has to be non-recourse. Right? You're legally not allowed to provide, you can't provide personal guarantees or use any other assets that you personally own as leverage when your IRA is the borrower, and indirectly through an LLC, your IRA is the borrower. Now, if your IRA is a investor in a syndication, right? So syndications are often set up as LLCs, and let's say your IRA is a small lender or a small investor in a giant LLC, like an LLC that's got 50 different investors that's going to buy an apartment complex, and your IRA is like a couple percent investor in that. Then it doesn't have to be non-recourse. But if you're talking about a single member LLC owned by your IRA, yes, it has to be non-recourse. Can I set up a personal property trust with the IRA as beneficiary, open a bank account, and have checkbook control? So I got to be honest, I don't really know anything about personal property trusts. With the IRA as the beneficiary and open a bank account. IRAs typically aren't beneficiaries. When you have an IRA, you can name a trust as a beneficiary of the IRA, not the other way around. But Terry, I'm sorry, I don't really know much about personal property trusts. If you want to give me a call, we can have a conversation. I can educate myself a little bit, and then we can have an intelligent conversation about it. Can we invest as private investors through you to established rehabbers for 6 to 36-month term? Invest as private investors? I mean, we only do retirement accounts. So, I mean, you can open a retirement account and have your account invest through established rehabbers for, like, if you want to do a note, if you're going to use your IRA to loan money. But you individually as private investors use Entrust? No. I hope that's answering your question. I'm not sure if I answered your question or not. How do you calculate maintenance fees by Entrust Group for a real estate purchase? Maintenance fees. I'm not sure. Maintenance of the property is whatever the fees for the property is. Our Entrust fees, though, is I've gone over already. We have an annual fee and then a $175 transaction fee to process real estate. But yeah, I'm not sure what you mean by maintenance fees. What is the maximum ownership you can have in a company that partners with your IRA? So that's a really good question. 50%, under 50% if your IRA is just an investor. If you have a role in the company that your IRA is going to be an investor, then that potentially drops to 10%. So if your IRA is just purely if you are just purely an investor, right? So you're not going to sit on the board or do anything like that, then your IRA can invest up to 50%. If you're going to have some role with the company, then that potentially changes and drops to under 10% or maybe 0, depending upon your role. Again, as I'm telling a few people, if you want to discuss, email me or call me, and I can talk in greater detail. It's a getting into investing in private companies in which you are going to also either work or be an owner can get pretty complicated. Can SEP IRA be converted to a Roth IRA? Yes. You can convert the money. So you're not converting the account. You're converting the money, the holdings in the account, right? So you would open a second IRA, a Roth IRA, then you can convert however much from that account into a Roth, and then you'll have to pay taxes on it, right? You're going from pre-tax contribution, pre-tax earnings to post-tax contribution. So you'll have to pay taxes on whatever you convert. But it's a new account. Is there any cap whatsoever on how much you can contribute to your self-directed IRA in a 12-month period? Absolutely there is. The IRS has rules about income limits, and depending upon the type of account that you have, what your age is, the IRS has rules for all those different types of things. Traditional IRA is $5,500 unless you're 50 or older, then it's $6,500. And that's not deductible if you make a certain amount of income. Roth IRA is the same thing, $6,500, but they don't allow it if you're above a certain income. SEP, you need to have a business, but you can contribute up to 25% of your income. I mean, there are rules associated with all of them. I encourage you to talk to your CPA about what is best for you. Does Entrust charge transaction fees when expenses are withdrawn or rent payments are deposited? No, when rent. So we charge fees for wire transfers either into or out of the account. That's $30 for any wire transfers. We charge $10 for any outgoing checks. So if you have a Senate write a check, we charge $10 for the check. There are no fees for ACH transfers either into or out of the account. So to answer your question, are there fees? There are no fees for incoming checks. There will be a fee for incoming wire. There's no fee for incoming ACH. There is a fee for outgoing wire. There's no fee for outgoing ACH. There's a fee for outgoing checks. So the answer to your question is yes and no, depending upon how you process the money. So if the account is with a custodian from your, that's the end of the question. So if the account is with a custodian from your former company. Sorry, Jenny, I don't understand that question at all. If your 401k admin allow their own self-directed IRA, will these steps work? Move some funds from 401k to their own self-directed IRA, and 2, move from 401k self-directed IRA to Entrust IRA. I mean, if your admin allows you your own yes, you don't even need to move it to its own self-directed IRA. You can just go directly from the 401k to an Entrust self-directed IRA if that's the choice that you want to make. But I mean, the way you did it on there, that would work as well. It adds an extra step that you don't need. What if you are providing the funding to someone else's fix and flip and UBTI and related items? So if you're loaning money for someone else's fix and flip, would it be subject to UBTI is the question? No, I don't think so. But again, I think it comes down to how many of those are you doing. Ultimately, that's one of those questions that is best discussed with the CPA. And there aren't any hard and fast rules. It's not like the IRS gives a specific number or details that in any level of detail. It's just so it's a question to have with the CPA, honestly. But if you loan money and somebody else did a fix and flip with it, no, you're not subject to UBTI. If you did 5 or 10 of them, then you might be. Is there an annual valuation requirement of the asset purchased? If so, for an SFR purchase, does that constitute a formal annual appraisal? So we are required to report to the IRS on an annual basis the fair market value of the assets held in the account. We ask you to provide us the fair market value. It doesn't need to be a formal appraisal. For real estate, for example, you could have a realtor run comps and provide the fair market value. We have a form. The realtor could sign off on their comp, and we would enter it in as the fair market value on your asset. So there is an annual valuation requirement that the IRS expects us to get. It doesn't have to be a formal appraisal. It can be something like with private placements, people just go to the company that they invested in and they tell them what their fair market value is. With real estate, just go to a realtor and have them run comps. If you invest long-term in an LLC that does fix and flips, is that interest subject to UBT, unrelated business income tax? Possibly. Sorry, I don't mean to be vague on the UBTI thing, but it isn't as simple as yes or no to answer that question. It may be, it might not be. Depends upon how you're doing it. If I have $185,000 in a 401k, is it best to transfer to a Roth before investing? Well, best is relative. If you have $185,000 in a 401k that's pre-tax and you're going to transfer it to a Roth, you're going to have to now pay taxes on that $185,000 because you're moving it from a pre-tax to a post-tax type of account. Now, if you want to, a Roth grows completely tax-free after you have the account for 5 years and reach the age of 59.5. So if you want to grow everything tax-free, then maybe it is best to move it into a Roth before investing. If you're okay with taking that tax hit on an immediate basis. Now, if your 401k, the money that you put in that 401k, if any of it is post-tax already, then you put that to a Roth without having to pay any taxes associated with it. So, best for you might not be best for somebody else. So, talk to your advisor. Who regulates self-directed IRAs? The Department of Labor regulates retirement accounts in general. And then the Securities and Exchange Commission oversees investments, so indirectly we are subject to SEC rules, and then the IRS, the Internal Revenue Code. Like a lot of the prohibited transaction, disqualified person rules, those are all dealt with in the Internal Revenue Code. Would I be able to lend money from my self-directed IRA to other real estate investors? What will be the fee for these types of transactions, any annual fee? Yes, your IRA, and again, I'm going to clarify that. People say, would I be able to lend, yeah, would you be able to lend money from your self-directed IRA to other real estate investors? Yes, absolutely. People do that all the time. What will the fee be? Again, I went over those. Annual fee, $299 per asset, or a fee based on the value. So the loan itself, the promissory note, would be the asset, and that would be considered one asset in your account. If you do multiple different notes, then that's multiple different assets, and they're each subject to the $299 per asset fee, or you look at the value of the account. Can you use the LLC that you already have set up, just change the manager? The answer to that is no. Well, let me rephrase that. Can you use the LLC that you already have set up? If the LLC is set up with you as the owner, then the answer to that is no. If you are already the owner, your spouse, your ancestors, your lineal descendants, then your IRA is not allowed to come in and be a member within that LLC because a disqualified person is already a member, right? But if it's an LLC that is like you want to use your IRA and your sibling has an LLC and you want to come in and have your IRA be a member, sure, because the sibling's not a disqualified person. How is negative cash flow handled by the IRS? Can you take the loss of your current year tax liability? I already answered this. No. You just lost money in your retirement account. That's all that happens. If you buy stock and the stock goes down in price in your retirement account lost money. That's all that happens. Same thing with real estate. Real estate loses money, your account didn't grow. If an IRA holder invests in an LLC that does real estate investments, but is the only person contributing. If an IRA holder invests in an LLC that does real estate investment, but is the only person contributing money, do they have to own 100% of the LLC? If an IRA holder invests in an LLC that does real estate investment, but is the only person contributing money, do they have to own? Well, yeah. I mean, the ownership in an LLC, the membership in an LLC is based on the money being contributed to it. So If your IRA is a 100% contributor to the LLC, then your IRA owns 100% of the LLC. If you want to bring in another partner, they have to buy into it. How do expenses get processed? Say after a year there's a plumbing emergency. Is approval needed? Is a fee charged for paying the plumbing bill? So there's no approval needed. You just send us the invoice, and we have a form called a payment authorization letter. Send us the invoice and the letter, and we pay the bill. There's a fee charged for paying the plumbing. We charge $10 to cut a check. If you have us wire the money, it's $30. If you have us send it ACH, there's no fee. But that's not even a transaction. It's a fee for the check. Please explain other self-directed companies that are fraudulent. I don't know what that means. I'm sorry. What is the IRS requirement for reporting at end of year? So we have to file, if you take a distribution, we have to file a 1099-R. We have to send an annual 5498 that updates any fair market values. If you make a contribution, we report that to the IRS. I mean, there's forms that we have to file, but it's based on 5498 is the only one that gets processed every year that has the fair market value and some other stuff. If you take a distribution or make a contribution, then that also gets reported as well. To clarify, I can take my portion of our company's 401k to invest in real estate. The rest of the company's 401k funds are not invested in real estate. Those funds just stay invested in mutual funds. Okay. I can take my portion of our company's 401k to invest in real estate. The rest of the company's 401k funds are not invested in those funds. I'm sorry, I'm not following what you're asking me here. Barbara, feel free to email me or call me. If I am over 59.5, can I buy an asset back as a retirement home for my retirement after several years of renting the property out? No. You can't buy the asset back. You can take it as a distribution. Can I buy as a so if your account owns a home, and you want to now take that home as personal ownership, you can't buy it. You're a disqualified person. Your IRA would have to sell it to a non-disqualified third party. But you can simply take it as a distribution to you. Like, we can distribute the property to you. Now, if it's in a traditional IRA, you're going to get taxed on the fair market value of that property at the time of distribution, but that's how you take ownership of the property held in your IRA. Does interest fees have to come out of the account being held? No. You can charge it to a credit card. And by the way, if you pay those outside your account and you itemize your taxes, those are tax deductible. Does a partner need to be set up at the time of investment, or can a partner be added at a later stage in case the original IRA can't run out of money due to incorrect budgeting? Good question. You can add a partner at a later stage as long as that partner is a non-disqualified third party. So if you're partnering with a disqualified person, so if you want to partner with yourself or your spouse or your parents or your children or anything like that, that has to be done at initial investment. If you want to add a partner at a later date, sure. It just can't be yourself, your spouse, your parents, your children, etc. It can't be a disqualified person. You can add a friend, you can add a sibling, you can add anybody else at a later date. You just can't add a disqualified person. Hi, when I roll over my 401k, Roth 401k to self-directed IRA, Roth IRA, will it count as two accounts? Yes. Traditional IRA and Roth IRA are two separate accounts. If I partner these two accounts to buy a single-family house together, do I need to pay any required fees for both accounts? Yes. Both accounts are subject to the annual record-keeping fee. Both accounts are subject to transaction fees. Both accounts they're individual separate accounts. They each have to pay their fees. If a traditional 401k is used to roll over to a self-directed IRA, who pays taxes before depositing income into the self-directed IRA? Does Entrust deduct the taxes? If you roll from a traditional IRA to an IRA, there are no taxes. That's a non-taxable event. So nobody pays the taxes. Why is that a small percentage? Why is it that small percentage of IRA monies are self-directed? That's a really good question, because here's my guess, is that most people who have a retirement account, they started off with a big company, or they started off with a company that had a 401k, and all of those 401ks are with big brokerage firms, and the big brokerage firms limit you to stocks, bonds, and mutual funds. So there is $25 trillion in retirement accounts, $24 trillion, something like that, in retirement accounts. Of that, $7 trillion is in IRAs. Of that $7 trillion, about 3% is self-directed. So yeah, there's a lot of money that's in just traditional brokerage firms. And I think a lot of people don't know about self-directed IRAs, and even a lot of the people that do know about self-directed IRAs, in order to, like, the whole concept of self-directed is you make all your own investment decisions, you have to do your own due diligence, you have to pick your own investments, and I think the majority of the people in the world don't want to do that. They want to have a broker who says, here's 4 different mutual funds that you should invest in, and then they can just leave it there. And then they have a broker a year later who says, here's 4 different mutual funds for you to invest in, so they make a little bit of money, and now you have 4 different mutual funds. I just think most people are more comfortable with that. They don't want to do their own due diligence to go find their own investments. That's my guess. When I convert my traditional IRA to Roth IRA, do I pay taxes with my personal funds or IRA fund? Oh no, you pay it from your personal funds. Please explain checkbook control IRAs. Checkbook control IRA means that you set up a single member LLC where your IRA is the single member, and instead of your IRA investing directly in the investment, your LLC invests, and it gives you checkbook control over the money. You can be the manager of that LLC, and now you can have checkbook control. Please explain Form 990T. I don't remember what that form is for. 990T. I'm sorry. I don't remember what that form is for. Why not invest in real estate through a mutual fund or REIT where you get the benefits of the structure without the risk coming into play? I'm not going to try and sell you on the idea that you should invest in real estate versus a mutual fund or REIT. That's a personal decision. If you're more comfortable doing it through a mutual fund or a REIT, then that's what you should do. Some people like to, I personally have real estate in my retirement account. I would rather do that than a mutual fund or a REIT. Some other people would rather do a mutual fund or a REIT, and that's what they should do. So that is it. That was the last question that I had. Those were a lot of them. Took a little bit longer than we originally planned, but I do appreciate everybody coming. Again, there's my contact information. If you have any further questions or need, want to talk to me directly if I didn't answer your question or didn't answer it to your satisfaction, don't hesitate to call me or email me, and I'll be happy to take another shot at it. Thank you, as always, for attending our webinars, and have a good day and a nice Easter.